Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 9th of December, and we have Brent crude oil trading this morning up about 0.5% at $71.54. Minor moves, you would have to say, given the scale of the news over the weekend. A regime that has been in existence in the Middle East for 50 years fell like a pushed over by a feather, it would appear, and off it went. And yet the markets seem unperturbed. Let's welcome back after a few weeks Omar Najia, Global Head of Derivatives at BB Energy. In your absence, Omar, there's been a lot of noise, but not a lot of movement in the oil price. Your
Mm.
thoughts of the intersection point between these latest geopolitical events in the region and their connectivity with the energy markets? It seems they are in totally different parallel universes.
Yeah, so again, the same, we say the same thing basically. How can you tell if the market is bearish is if you try and feed it if it looks at any kind of news and decides to head south. So, not impressed with the oil market. I don't think Syria has an effect on the oil market in any case. Neither does anything to do with Lebanon or Israel or Gaza. All in all, I think we continue lower on the oil market until it gets so cheap that people say it won't go any lower, and then it'll go lower. And when it does that, then I think it'll be time to buy. But certainly, I think, WTI $65. I think we need to get below that. Maybe, I mean, who knows? Substantially, not substantially, but I don't think people are going to buy unless you get below 65 and set a new low for the year at the very minimum. So I think lower in general, higher on everything else, higher in terms of equities, higher in terms of Bitcoin, higher in terms of inflation, oil lower.
Bora Barryman, managing partner at Hormuz Strait Partnership. Bora, I know you're not a geopolitical analyst, but the intersection point, you are Turkish, and the intersection point of this events over the weekend seemed to feature Ankara quite prominently in much of the reporting. But I must say I struggled to see where they win in this equation. What's their win if they are indeed the choreographer or one of the choreographers of this event over the weekend? Your thoughts of the event, its implications for the region. I'm not sure I concur with Omar's somewhat view that it doesn't feature, but your thoughts.
Well, I try to look at the situation in Syria from a sympathetic point of view, and the striking, at least, narrative that is moving me is people expressing an intention to move back to Syria, and that is perhaps the light at the end of the tunnel for most of the Turkish public opinion, because there's a feeling that the welfare state in Turkey is creaking, and perhaps it will kind of gain more resources to give to Turkish citizens if the refugee load is a bit less. From the perspective of the geopolitics, is Erdogan behind it, or is he puppet or puppet master? That's debated widely within Turkey, and many of my friends ask me about my opinion. I say, look, let's wait and see, because clearly a big threat for Turkish security that could drive a big crack in the global alliance system is the future of this YPG group in Western Syria. And I think it is the express policy of all I would call the civilized nations, that there should be a single unitary Syrian state being reestablished through negotiations. But many are doubtful, right? Because, you know, there are some cards on the table that the players may not want to give away. The U.S. with their, I would call it that statelet, from the Turkish point of view, that YPG, Syrian Democratic Forces.
Where there is approximately 400,000 barrels of oil production capacity pre this conflict that could be emerge.
Exactly. And well, you know, from the Turkish point of view, they just wanted to see it integrated within the Syrian state system, just like we would for Kurdistan to work within the Iraqi state system, right? So will the actors now running Damascus be able to establish that legitimacy? Big question. I think all decent people should hope for the best, but it is a question mark that that can be established.
Let's welcome Victor Katona, head of oil analysis at Kepler. Victor, I mean, there's been a few big things to take on board this Monday morning. The end of last week, we had the OPEC Plus meeting to essentially extend the current status quo for another 3 months, and then the major geopolitical events of the weekend. All in all, neither really had much impact on the oil markets. Your thoughts of the intersection point between all of those things?
Well, I think trading will be very much range bound over the upcoming period. I slightly agree with Omar that the trends would be more towards the downside, but it's also because people don't necessarily want to take a position when they don't know what the Trump administration would do. We really need to wait for January 20th to kick in. Forgive me. And then when he's in office and the first executive orders would finally, you know, start to come through, then we'll effectively see how stringent he is on sanctions on Iran. Would Marco Rubio mean effectively the scrapping of waivers for Venezuela? All of those points are actually quite bullish. I mean, if in effect, I think all the bullish talking points into 2025 are geopolitically driven rather than fundamentally driven. The fundamentals is weak. I think OPEC Plus continues to confront this idea that basically there's a lot of supply happening at the same time. Most of it even is purely incidental. The fact that, for instance, Brazil would be so strong in 2025 after completely failing 2024, that's just pure, you know, that's just happenstance, nothing else. Yet all it happens to drop into 2025. We have an oversupply still very much looming on the horizon. It has not yet happened, but everyone is pricing it in already. So I think OPEC Plus has done the correct decision. It's a smart move to wait. The regretful thing for OPEC Plus generally is that they would need to wait not a couple more months, but I would say a couple more years until they can, in earnest, bring back all of that production that was effectively cut in. But it's a good smart move to wait, and then effectively, I think in the first quarter of 2025, would finally have something to discuss, which is just more than, you know, perennial disappointment with China or looking at U.S. Fiscal policy.
Omar, you know, we've seen in recent months or the year that we've just ended that you know, quite often the oil price has been range bound, and then there's been moments of geopolitical elevation where prices have sort of peaked up a little bit. My question to you, and sort of continuing to sort of deconstruct the fallout of the events of the weekend, are we closer or further away from a regional conflagration? In essence, as you said, Lebanon doesn't matter really that much from oil, Syria not so much, Palestine not so much, but inevitably it's always mattered through this year whenever it sucked in Iran. And then we saw the price run a few dollars, and in some cases even more than that. So my question is, does this suck in Iran? Are we closer or further away from another face-off between Israel and Iran, do you think, and that Iran's vulnerability has been elevated? Your thoughts? You're on mute. Sorry, Omar.
Yeah, I think basically if you read the mainstream media, then you think, oh, we're closer to war, right? So if you look at what happened at Syria, these quote unquote rebels. They're basically Al Nusra Front, Al Qaeda, who basically, he took off his turban and he became like a rebel, financed, armed, trained by the Turks and the Israelis with the Americans. I mean, it's really simple. It doesn't take, a lot of, and basically, the reason why they went from Idlib all the way down to Damascus is that they paid off all the Syrian army generals and all the rest of it, and there was no fighting. It wasn't like it was a pitched battle, and off they go like Hollywood, rolling around, get the RPG. No, no, no. It was all done beforehand. Checkbooks went, whatever it is, drive straight through Damascus. Assad gets on a plane, goes off to Moscow, and all done and dusted. So I think the idea basically, or the movie, that the kind of thing is, freedom, and really they've changed it, give them a chance, they're really nice and all this kind of stuff. But the bottom line is, if you have any kind of conflagration, quote unquote, with Iran, there is no winning. There is no winning because there is no ground invasion. There is no basically victory in terms of anything, because at the end of the day, you're talking about at best nuclear exchange, right? Iran is big country, Israel small country, so you can make your mind up what happens. And if you don't believe in any of that, no, they don't have nuclear weapons and we have technology and super duper, I don't know what, blah 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 blah, blah, then they shut the Hormuz Straits and the equity markets, I'm telling you, in a second, go to absolute zero, which will mean the absolute implosion of US markets, European markets, any kind of, stock market, China, Russia, goes to zero in a second. Oil goes to $300, $400, $500 in a second. So whatever you want to do, whichever way you want to, do this, what do they call it? Like when they do models, like they're going to do a war game and whatever. The end result is either nuclear war.
Well, the question is on that, I suppose, does Israel care more about the NASDAQ or about ending Iran's nuclear capabilities?
Man, forget about Israel. Israel can't move without the US, without bombs, without intelligence, without planes that fuel. They can't do anything. I mean, they can't do anything. You've seen them, it's been a year and a bit in Gaza against guys in flip-flop and Adidas pants. Fuck's sake. So I don't think Israel without the US. So the question is Trump going to risk MAGA? Is he going to risk his political future and the political future of Vance, right? So this is a great victory by the Republicans. Is he going to risk that whole red wave to commit suicide for Israel? So I would bet a body part that the answer is most definitely no. It doesn't mean
he wouldn't be the first US president to possibly take that bullet. But let's move on. Bora Barryman, there are other things in the world like, oh my gosh, I thought we were going into a loosening cycle on interest rates, and maybe hold on a second. There's sort of running in that old dog yet. The U.S. Economic outlook seems to indicate that no. Does that matter as we go into the new year that, actually, maybe we're not going to be easing as fast as we thought, at least in the context of the United States?
It's hard to tell what the Fed will continue to do. When we listen to Jay Powell, and the signals are he will be renominated by Trump for another term. Jay Powell's
no, I don't think he can be, can he? I think he just won't be fired. I think that's the language. I don't think he can be renominated for another term, because this is his I think there's a term limit for the Fed. I believe so. But I think what Trump is saying, no, I won't fire him. That's the latest. I wouldn't believe the word he says, but that's what he said yesterday.
So taking the crisis card off the table, my point is the continuity there means a very kind of murky outlook, right? Because we don't really get much from the statements of of Jay Powell, and he doesn't really stick to his guns. He reserves the right to change his mind and change his direction. So essentially, give us a guidance or indications of what they believe, and this sort of buoyant, euphoric reaction to the Trump election and his announcements have been very good for Bitcoin, have been very good for the U.S. equity markets. And for me, Bitcoin is sort of a inflation anxiety indicator, quantitative easing anxiety indicator. And the big institutions are falling in line behind the sort of alternative assets, because I think they do believe that, whatever has been the growth model of the United States over the past couple decades will continue to be that growth model, which is basically, leader of the free world that is driven by debt, right? The debt block. They'll continue to print money and buy and import goods from the rest of the world with currency and credit hot off the printing press, so to speak. And I can't see that Trump is a balanced budget guy by any means.
So if we think
guy.
about, he's clearly a growth guy, and he is beyond anything a debt guy.
He's not like these Europeans. They got themselves into the austerity lane right after the last financial crisis, and that would never happen in the United States of America. Hence the massive delta and deviation between the trajectory of the two blocks.
And with that strengthening dollar, that becomes a factor, because there was a sense that we were going now into a weakening dollar cycle. It appears that maybe that's not the case, given the divergence between the Fed and the ECB and others. But Victor, looking at demand side of things going into the end of the year, China, is there a kind of an over bearish sense on the demand weakness, as there was maybe at the beginning of the year, an overconfidence on demand being more robust? Now at the end of the year, there's a sort of far too much pessimism on the outlook for demand. Your thoughts on the demand side of this equation going into the new year?
I mean, I think demand is still pretty much fine. There's a lot of the expectations about how demand would weaken over the course of 2025 is really just the expectations of what would happen, say, in 12 months from now onwards. But as things stand right now, even before Europe has started to shut down refineries, the US starts to shut down refineries, and all of that is happening in 2025. I think there's one thing that has very much damaged the outlook into demand, and that's Chinese domestic policy. Because China was about to have a relatively normal winter. Everyone was expecting it. Everyone was thinking that now is the time for them to regain some sort of stability overall. And then, bam, the Chinese finance ministry comes out and says that basically we're cutting the export tax rebate, which pretty much means that if China wants to export oil products out of the country, I mean, effectively, the profitability thereof is almost minimal, if not non-existent. So overall, China will be refining less, buying less, again, damaging the overall physical sentiment in the markets, because the Chinese government has effectively said, we care more about the stability of the budget than we care about the profitability of the oil companies. And that's a problem, right? Because margins have been squeezed for way too long, and the companies have been working in this environment for way too long for them to endure, this perennial pressure that they have been on. So I think that in a lot of cases, demand as a residual sort of pattern of consumption is actually fairly good. The summer has been a very solid summer. The winter was supposed to be a very solid summer, and we're basically still yet to see the big damage that everyone is still talking about. But policies of governments, that's what damages the outlook much more than the actual behavior of consumers. You look into the European Union, carbon border mechanism, the carbon prices on shipping, methane levy in 2027, the banning of fossil fuel cars. Europe has always been, at the absolute peak of bad policy. But now Asian states have been joining that basically that list of governments that effectively damage their own consumption patterns. And I think that's the problem. That's ultimately the problem. People and industries in general have been dealing perfectly
And to
well.
add to that problem, they've got tariffs coming their way.
Oh yes. Oh yes, and that's the the great unknown, the known unknown in the words of Donald Rumsfeld. No one really knows how big the tariffs could be, and what potential impact could anyone expect. Like the Canadian tariff that Trump wants to slap on Canadian oil is purely suicidal. I mean, Canada is single-handedly the largest source of oil for the United States, so 4.5 million barrels per day. How can you slap a tariff on that? I mean, it's too big to punish. Yet we're still talking about it. So basically, there's a lot of uncertainties. And as we move into 2025, I mean, we'll have a lot of talking points with Trump in office, that's for sure.
But we don't seem to see any of those uncertainties reflected in the markets. That's the sort of strange thing. I mean, the oil market's got no heartbeat, and the equities and all the other risk assets are going on a tear. They were already on a tear, by the way, before Trump was elected. I mean, we were already hitting records every week on the equity markets, and obviously Bitcoin was already in the 80s. So it's gone an extra level, but it seemed to me was going to go there anyway. It was everything moving in that way. Let's go to the survey question, which I think to me is a question that maybe there is no immediate answer to, but does require some thought. The collapse of the Assad regime in Syria will make a regional war between Israel and Iran, one, less likely, two, more likely, three, no impact. I mean, I'm curious as to and I don't have the answers, and nobody does, obviously. Well, maybe some people do, but Russia and Iran's retreat over the last week from Syria, was that coordinated as part of this big sort of Hollywood choreography, or were they caught off guard and weren't able to defend their position and now have to face the consequences of what appears to be in a relatively weak place, at least from Iran's point of view? I mean, Syria clearly was a paper tiger. It was all about the fear of something that wasn't there in the end. Hezbollah looks kind of the same. I mean, you'd say Hezbollah really didn't have a bite in the end, although they did face overwhelming power. But so where does that leave Iran and the regional situation? I think it still requires some thought as to how that could play out. I don't see Netanyahu stopping with all of these victories. Survey question is there. Omar, looking forward into the structure of the markets, obviously we have the technicals as we look at these things. Is there buying? Is there selling? Are the funds going to come in and see this as a great opportunity to pile up and go long? What do you think of where the technical side of this market looks at the moment?
So I think basically that people always make the mistake in when they do analysis and they say demand is this and that and supply and this refinery and this more supply and Iran and sanctions. So markets, they don't trade what's known as the truth at the prompt, because nobody cares. You understand? Nobody cares, right? What they trade is future sentiment, right? So this future sentiment is why we're here. We're here on risk assets, and we're here on the economy, and we're here on equities, because everybody knows that all this stuff about the Fed, they might not cut and whatever. It's all bullshit. They're going to cut and keep cutting no matter what happens. Inflation doesn't matter. They just talk, no. They're going to keep cutting and cutting and cutting, and inflation is going to soar. And this thing about the dollar basically has come off massively. It was very, very strong until the end of 2022, I believe. And then that was the end of a 12-year dollar cycle. The dollar is going to weaken and weaken markedly. I think that basically you're going to see sterling at 130, 140, easily 130, 140, 150, 160 against the dollar. I think you're going to see the euro at, let's call it 180.
Is that a reflection? Is that more a reflection on dollar weakness or sterling strength?
No,
I mean, where would sterling strength come from?
No. It's a reflection of if you are the US and basically you have nothing left. All you have left is isolationist. All you have left is tariffs. All you have left, basically, you have no competition. You have no nothing. Tariffs are massively inflationary. So instead of letting people buy a Chinese car for $20,000, you're going to make them buy a US car at $60,000. Same car. So tariffs, all that is going to basically increase inflation in the US massively. And the only way that you can hope to compete on the world scale, on the world stage, is to devalue the dollar. Why? Because the Chinese, when you hit them with tariffs, what are they going to do? They're going to devalue the day one. So again, people are surprised. Oh my man, tell me, why is Bitcoin going up? Well, it's not Bitcoin going up. It's basically the dollar and fiat currencies devaluing. They're all going to basically, and it's shocking. It's been going on since, Bretton Woods, one direction, like this. And people are like, you know what? So
Well, if
my
you take that
advice,
analogy that, a decade ago, a Bitcoin was $1, now it's 100,000. That collapse has already happened,
yeah,
in essence. Bora, looking to Europe, obviously seems to me like it's the biggest story in some regard. The next big geopolitical story is Europe. The French government is on the verge of collapse. The German government, the two biggest actors in Europe, facing elections. And at the same time, we've got, it would appear, one of the narratives coming out of Syria over the weekend was there was a trade. Russia retreats, they get the east of Ukraine in trade-off, and Europe sits on the sidelines while all of this big negotiations go on. Your thoughts of where Europe is going into the new year with these major geopolitical paralysis in France and Germany as the Ukraine crisis comes on to Trump's plate?
Well, it was interesting to see these handshake body language memes from the Notre Dame re-inauguration, right? With the Trump and the Prince and Macron and I think I saw some interesting memes of Macron's hand X-rayed and the damage that was done to it. But I can't see that. That Europe will meekly go along with sort of being structurally priced out of global markets, right? In the way that that Omar described, having their currencies kind of appreciate to the level that they're not competitive with either America or Asia. So what's the future for you? It's nothing. And that would definitely drive a lot of populist resentment, right? Because a strong currency helps the established financial segments that have exposure to U.S. equities, etc. But what about workers who want the industry to go to and get their weekly paycheck? They will drive the rise of, I think, these alternative movements.
And you still
that
have
might
the
say-
reality the reality that isn't necessarily underpinned by economic logic, but the flight to the dollar as a safe haven is still very much a big play in the reality of the world. And when there's uncertainty in Europe or elsewhere, for better or worse, people still fly to the dollar.
Well, I think you're right. That's certainly correct. But at the same time, I'm just trying to get to the point of what European policy will be. Will they allow their currencies to appreciate to the level where they're not competitive? No, I think they will also want to kind of take part in the race to the bottom and take part of some of the growth opportunity that is driven by low interest rates. So there will be a certain race there. And I do think that there are increasingly influential names that are seeking an independent view toward what's happening in geopolitics. You saw Dominic Cummings quite sharply chastising the alignment with the U.S., Taiwan and China. What does it have to do with us, he said. And I think Germans will also be scratching their heads to say, well, why aren't we getting the cheap energy just like all our major geopolitical competitors are seeking to get, right? I mean, these questions are
that
being
America
raised.
has ultimately on its doorstep, given their access to cheap domestic energy in Europe. You would, I mean, I don't see, if there's a deal done with Russia, why that doesn't include rushing back to buying cheap pipeline gas.
I agree with that. I mean,
doesn't
I
seem.
think it's a vital importance. It's a vital national interest for Germany, if they want to be the Germany that we all grew up with, to have access to that resource that drives their industry, the chemical industry, the steel industry, all the sophisticated industries that they have. You need to have access to cheap
You can't
energy.
do it with $20 LNG, that's for sure. Victor, closing out the big sort of news we haven't touched on yet. Less likely seems to be the review, no impact, more likely hopefully no impact wins out, but I'm not so sure. We'll see how these politics keep moving. It's been a year of ups and downs in that particular face-off between Tehran and Tel Aviv, so we'll see where it goes. One to keep an eye on, I would suggest, because there's increasingly more noise over the weekend about Iran's nuclear program is getting out of hand. So that's sort of the precursor to something. But Victor, Saudi Aramco announced its official selling price into Asia over the weekend, the lowest level in 4 years. Your thoughts on that and what it tells us of the direction of travel as we go into what is for January delivery?
I mean, it tells us something about how Saudi Aramco feels about the market. And Saudi Aramco feels about the market even worse than everyone expected it to be. If you just look on, what the future situation is, how the backwardation looks, they shouldn't have cut 90 cents into Asia. It just wasn't meant to be, but they still did, because they understand that the more we move into 2025, basically the 2025 would be a year when refiners in Asia start to buy less term. Everyone would start to buy more spot because it guarantees you basically a better price. No one wants to be committed in the long term. Everyone wants to be flexible. And I think this year of flexibility is very much reflected also in that pricing. Aramco understands the structural difficulties ahead of us. It understands that it needs to entice the buyers to buy again. And that is the reason why we effectively see a multi-year lows in pricing. It's not only in Asia, in Europe, massive cuts again still. And it's a continuous process whereby Saudi Aramco just keeps on cutting, and all the Middle Eastern NOCs, they also keep on cutting and cutting. So I think it's a reflection of our times when, the past 2 years were really a period when the oil companies felt strong. Right now, they no longer have that sentiment. They no longer feel that they can, take granted that the demand would be there and the customers would still be buying the way that they did. It's a different era, with different challenges, and they're up for it.
Is this a market share? Not a war is a very dramatic word, but this is clearly a fight for market share. If you drop your prices that dramatically, I mean, you might call it something else, but ultimately, that's what it looks like.
Absolutely. Moreover, I would even say I would argue with Omar a little bit on Iran. I think that I would agree with him.
That's why he's on the show. Everybody has to argue. That's the T-shirt. Argue with Omar. Wake up! It's Monday morning.
I actually agree with him that there's not going to be a war with Iran, but I think that there's one thing that would happen. Iran would gradually start to disappear from the Chinese market. The volumes would still be there, but the maximum volumes that have been in place this year, they would gradually start to subside. Who's going to take that place? I mean, whoever has the best price. And whoever has the best price is already thinking about, the prospect of there being less Iranian exports. There's going to be less Iranian exports because literally, except China, Syria was the only country that was buying Iranian crude. That's off. So basically now Iran is fully Chinese dependent. Yes.
Can I say one thing? Iran basically was buying, pretty much nothing. But apart from that, what another thing you should think about is the strategy. There is a strategy between Iran, China, and Russia. That strategy is not based on, the lowest price, blah, 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 blah. It is not, because they understand what the other side is doing. So you have to factor into account that, yes, prices matter. I'm not saying they don't, but what I'm saying is, in my opinion, Iran will still do what it's doing today, which is move 90% plus of its oil to China, whether it does it through Russia, whether it does it through shipping, whether it has armed guards on the ships or Russian escorts, who knows? But I don't think it's going to be basically that the West somehow is going to come back from this and start, squeezing Iran. I mean, the point is, if they've been doing the squeezing on Russia for 2 years and Iran for 45 years and achieved absolutely nothing, I don't think hoping that they're somehow going to do something now is,
Well, we have to hope we get off the air so you guys can get back to work, or your bosses will be in touch. Omar Najee, as always, wonderful to have you back. Have a wonderful, happy holidays. I look forward to seeing you over the next few weeks. Bora Boriman, ho to you, and thank you for all your contributions this year. And Victor Katona, really appreciate your participation and look forward to seeing you all soon again. Happy holidays. Thank you, guys. All the best.
Thank you.